And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Forecast. It is Tuesday, October the 26th. I'm John Hoagland. Thanks for trusting me with your time. I've got some solid charts for us today. I had to do a little bit of a workaround, but I believe we've got them stable. And let me know if they look clear and everything when we get to them. Excited to have this because I believe it's a pretty much a cure for the problem we've been wrestling with for, I don't know, about a year. I don't think we're going to have to hear, and there go the charts anymore, hopefully. As always, we're going to be looking for context, always thinking about risk management and staying patient in our trading today. Economic numbers this morning, 8 o'clock, yet to come out. Case-Shiller and FHFA. Housing prices due out. We got a lot of housing information due out this week. 9 o'clock, new home sales. And consumer confident, that's at 9 o'clock Central. The first two, 8 a.m. Central. All right, that's enough of that. And again, looking forward to a complete market forecast this morning. My apologies for Friday and Monday, but I believe we've got things ironed out. As far as news is concerned, there's an order for Tesla, 100,000 vehicles by Hertz Rental Cars, has boosted the stock market cap above $1 trillion. That's always good news for you Tesla traders. Shorts, screaming uncle as stocks set to open higher, awaiting more earnings. And from this morning, we've got UPS, General Electric, and Lockheed Martin already out. This afternoon, we will be waiting for Alphabet, Microsoft, and Twitter. Lots of FANG stocks this week. Markets certainly keeping a close eye on how those are doing, and so far, so good. Crude prices softened a little bit overnight. Just awaiting the API and the EIA numbers. API looking for about a million barrel boost, I think, is what they're looking for this morning. This afternoon, actually, when that API comes out. Make sure you like, share, comment, question, feedback, and heckling are always welcome here. Subscribe to our YouTube channel so you can get notified when we do go live. Looking just a few minutes ago at the VIX, the dollar index, and the yield in the 10-year. VIX, of course, lower, about 2%, 14.96, getting pretty low there. Dollar index, 93.83, just about even from where it closed yesterday. And the 10-year yield off a little bit this morning, down at 1.63%. I think yesterday was 1.66% as we were doing the forecast. Again, we got to say good morning to everybody. Patrick, first in the room. You win the prize this morning. Dr. VJ, Spencer, good morning. George, Andre, Spencer, can't wait to start my funded account next week, paper trading this week, just to keep up with what the markets are doing. Always a good idea, Spencer. When you do get that information about your funded account, take your time. Take your time. This is a marathon, not a sprint. Rick, good morning. I hope the gremlins are gone. Yeah, I think I'm going to hang this guy on the wall behind me so that we always know where he is. Robert Kennedy, Harry Gordon, good morning. Jason, Alfred, the infamous Felix Escobar, good morning. Zoraine, Angelina, good morning. Laura, good morning. Three Lions Insights. That's a new name. I don't know if I've seen that one before. Welcome, Walt Rhines. Jerry's awake. Hope John is too. James P. Vince, good morning. Robert, Frederico, and Steven, as always. Good morning to all of you. We've got the registration link for group coaching. That's on Wednesday. We had a group coaching yesterday at 1 p.m. Very good session, I thought. And we're looking forward to seeing you on Wednesday, 1 p.m. Central for the group coaching. Jules, good morning. Harry, good morning. Sir Harry. And so, yeah, make sure you register. We'll see you there. As always, trying to answer any questions that I can. Nobody knows everything, that's for sure. And I am certainly one of those. All right. So, it's truth time. Let me know that these charts are coming through nice and clear. Here we go, starting with the daily and crude, no particular order. Everybody knows the rules. All right. So we had a pretty decent push or a test above weekly kickoff high, which 84.70 is weekly kickoff high. Yesterday it was unaccepted, not accepted, decent volume, losing 1,300 in that's not necessarily bringing new business in, but the way this market is and the structure that it is, I don't want to be looking to sell this market. Harry 2, got it. Got you, Harry 2. And all right, the charts look nice and clear. Excellent. Thank you very much for letting me know, Harry 2. So losing open interest, testing above weekly kickoff high, rejected. API and EIA pending this evening and tomorrow. Lower open interest and volume at highs. Are we starting to perhaps tire in this move to the upside? Boy, I sure don't know, because the supply end of the market is getting thin. So I'm not really looking for any major pullbacks. We are testing yesterday again against another level of expected participation from longer time frame. We did not push them into it yesterday. What does that mean for today? I don't know. Let's see if we can get another look up at that weekly kickoff high. Here's the 30-minute chart. So here's our gap to the open, gap higher. The market attempting to find new buyers yesterday above an important inflection level. It did not happen. We saw the market pull back, or all of our overnight longs liquidated back down to settlement. And then the market settles back there again yesterday. Exact same settlement as Friday yesterday, 83.76. Overnight, we've got some mixed overnight inventory. There's a little bit of emotion and perhaps a repair type of day potentially for us in crude. In other words, we're going to open in a low volume node between two high volume nodes. The market goes and tends to go and recheck those before picking a direction outside of where it is. We're still, I believe, somewhat in the daytime frame spell of the late spike that occurred on Friday. We took the market basically almost to the base of the late spike, where an assumed base of the late spike. There's the where the market broke out above the previous range, and then there's where that bar began. Both of them can be, I believe, considered the base of the late spike. Yesterday, the market traded down to it, closed above it. Last night, we looked down below it. We're going to open back above that late spike. So, again, looking at yesterday's low as an important level, perhaps for an opportunity for an execution, makes sense to me. But again, we're going to be opening no real major overnight inventory, no real urge to get into anything very quickly so far in crude, waiting for new information. And again, perhaps a potential repair type of situation day in crude. And let's look at the S&Ps now. Okay. What can you say about this market? I mean, it's like the Energizer Bunny. It just keeps going and going and going and going. Uncles have got to be screaming, or shorts have got to be screaming uncle right now. The grind back to the upside is on. We're at all-time highs. We're at all-time highs now, overnight all-time highs. Tend not to be left that way. On some pretty decent volume for the last couple of sessions. We've been adding open interest, adding another 23,000 in open interest. So money is coming into the long side here. 4,600 weekly kickoff high, certainly in play today. It's 25 points away from where we are right now. Take a look at the 30-minute chart. And here we go. Another gap, another day, another rally. What the heck is going on? So we've got a lot of overnight longs in this market. In other words, settlement is all the way down here. The market opened and has been trading higher all night. So we got to be a little bit cautious for a contrary move, a pullback due to overnight inventory. But what the overnight inventory is looking for, they're looking for continuation. They're looking for buyers to come in and start continuing this move to the upside right off the open. If that doesn't happen, they may start to get nervous and give us a better opportunity to buy this market on a weakness than just looking to bail into longs up here. You know, we can't forget there's look how far we've come in a short period of time. There's bound to be some sort of contrary move, some sort of pullback, some sort of correction in this move at some point. We don't know when and we don't know where, but I don't want to try and fight this move to the upside. If I catch the downside move, great. If I miss it, I'm okay with that because I just don't want to get caught like everybody else is right now. This market for 40 years has been eating shorts. You get short, the market eats you up. You get short, the market eats you up. You get short, the market eats you up. Be cautious about that. Okay, if we see some sort of a crack, maybe we'll see some decent kind of a pullback, a fast, vicious pullback as they tend to be. But again, I don't know when, I don't know where, and I don't know how. And one of my clients has been telling me, you're talking about some sort of profit-taking event or some contrary move, and I never seem to see it in the S&Ps. And it's going to happen the minute we give up on it. The minute we give up on that big pullback to the downside, that's when it's going to happen. Let's look at the NASDAQ briefly. So the NASDAQ finally kind of getting to an inflection level where we believe longer time frame traders may become more important in this market, as if they haven't already. I mean, obviously the market's been moving higher, a little bit of a bull flag here, breaking out above the bull flag yesterday, now working with the high of the weekly kickoff level here. 15,574 is that level. Our all-time high still a ways away, basically a day away. If we start to see buyers continue to come into this market, it's not a very big distance for us to go back and take out that previous all-time high. Open interest adding 1,700, volume yesterday, not tremendous, but not all that poor. These markets tend not to bring huge volume to the upside. They bring volume to the downside. So we're going to be opening above this important inflection level. Look at the 30-minute chart. Settlement is down here, 15,495.75. We're holding some longs, but one of the difference between this and the S&Ps is we've got an important inflection level right between and where we currently are and where settlement was. If we're going to be looking for an overnight inventory, it's probably going to start below weekly kickoff high. Make sense? Our overnight longs are looking for buyers to continue to move this market higher. If price comes down and reaccepts below an important inflection level, that would be a signal for me if I were long overnight to say, okay, that's it. I'm going to take this and we'll see what happens next. Be careful about the weekly kickoff high. It may be very pivotal. It might be a market that is going to create action among a large, short time frame, weaker hands community of traders. Gold. Okay. So we've had overall lower highs and lower lows. That seems to have changed. At least for the time being, we've been putting up higher lows and higher highs. This trend line 1, 2, 3, maybe 4 good solid touch points broken out yesterday. We added 10,000 in open interest, so that the acceptance above this trend line where we tried last Friday was rejected on high volume. Now it looks like we are accepting price above that trend line and starting to see buyers come into this market. Between yesterday and Friday, we added 30,000 contracts in open interest. Higher highs, higher lows, higher high here on Friday. The next higher high would be weekly kickoff high, which is 1825 even. If we can get there, we've got an inside day and extended trading hours so far in the daily chart here. All right. So yesterday morning, I believe we talked, but we couldn't see the charts about potential repair. It was a big emotional day on Friday. Yesterday, not so much. Not so much. Just an inside day, not a whole lot of activity, not a whole lot of opportunity, but we're still in this range from Friday. Repair tends to go from high volume node to high volume node. We checked out the high volume node all day yesterday up here. Do we come down here and do we check this high volume node down here? Opening range so far is the high of the regular trading hour session, which is 1806, which is just below our 1807 to 1809 important inflection level that we've been kind of magnetic to throughout the session yesterday. Now it's holding above and perhaps holding some resistance. The opening, the medium time frame momentum seems to be to the upside. So I'm going to be looking for opportunities to buy weakness when I get it. A move down to this point of control, this high volume node might do it. How about how the market just traded right down to the value low, which is a degree of repair from Friday's very toothy, very emotional profile. Give me a interesting trading day here if it hasn't been for you already in gold. Take a look now at the euro. Okay. The volume increase on a down day below a 3 or 4 day area of balance here. We added open interest on this move to the downside and indicating we've got some folks ready to continue to try and sell into this market. Overall, our highs and lows are continuing to be put in at lower levels, lower high, lower high, lower high, lower low, lower low, lower low. You got to see if we can continue that move at some point here. Is it getting too tired to continue this move to the downside? What's the dollar going to do? All of these things we're going to need to keep an eye on. What I'm thinking is with the market as centrally located inside of weekly kickoff range and inside of last week's range, we're starting to fall into a little bit of short time frame control here. Short time frame control means we're looking for shorter time frame levels with which to look for our opportunities. What are we looking at here on the 30-minute chart? Hi, Troy. So here's the 30. Yesterday's profile, no real overnight inventory. We've got a gap here. Looks like we've just come up and closed the gap from Friday to Monday. If we find some acceptance inside this previous area of balance that we looked out below, tried to accept, if we start to re-accept inside, again, this area of balance, that might be an interesting opportunity for us. This should be resistance right where we are right now. If we can't hold below it, we'll look for a continuation move, perhaps to the high of value from Friday. And if we cannot accept inside range and value from last week, we'll look for this market to continue to rotate lower. A lot of it, of course, depends highly on the dollar. Let's look at the 10-year and the net gas here. So the 10-year has been, since it broke out of its kind of triangle here, it's been putting up bear flag, bear flag. Is this another bear flag? Obviously, the market is moving lower. Rates continue to kind of creep higher. They've crept a little bit lower this morning, but we're putting in lower highs, lower lows, and we have almost an inside day here compared to yesterday. We lost 65,000 in open interest yesterday. Off the low. Buyers came in, obviously, and did a little bit of short covering, perhaps, off this low on Friday and yesterday. What's the 30 look like? So here is our bear flag. If we break out and accept below this line, that's going to push us back down towards weekly kickoff low and perhaps even points lower. We've seen bear flag after bear flag continue to offer opportunity here. For a continuation. We've got to accept. What is acceptance? Time, volume, momentum, participation. Let's look at the net gas here. Net gas 10. All right. So it's a fascinating market. We had a head and shoulders reversal. We never did quite get to the measured move to the downside. I'm viewing that as important information. Now we've got an island bottom, 5 days of range where the market gapped down to it and gapped away from it. The gap is minute compared to some. It still is a gap. It is still a pretty decent reversal pattern. When you think about it, the S&P has put in an island top, and we just took that out. This is an island bottom. This is a reversal pattern. We had a reversal pattern here, another reversal pattern here. Are we going to continue this push to the upside? If you remember last week, it was talking about kind of almost seems strange or unnatural to be talking about nat gas on a down move coming into the winter months, especially with everything we know that's going on, was very unusual. Now this seems to make more sense. Yesterday we added 15,000 in open interest it is rollover. So we're going to be expecting a big volume surge like this because we just came off of the November contract. This is the December contract. This is going to be a little bit blurry for us to see, but I'm really impressed that we did see a 15,000 contract increase in open interest while one of the contracts is expiring. That should be taking open interest away from the market. So, we've got a situation here. We've got a weekly kickoff high here level, which is $5.80, which could be offering a decent opportunity for us to limit risk against. Here we go. Here's that level. Here's the gap. Here's yesterday, the push to the upside. Settlement is all the way up here at $6.05 and a little bit of change. We had some overnight longs. We got some shorts here in this market. Boy, it sure looks like an interesting spot for us to be looking at this $5.80 as a relatively decent opportunity to limit risk and to see this market come back into value and points higher. If it can't hold, well, we've got other areas to be looking at. We've got our gap. So I am looking to buy weakness in nat gas. And I think we might be getting pretty close to an area where we might actually see some fish. I always like to see lots of fish. That's the idea. That's what we're looking for. So I believe we have a nice, solid fix so that we never have to hear, and there go the charts again. I'm glad that they appear to be nice and crisp and clear for everyone, and I appreciate everybody letting me know that. Fred, you are more than welcome. Everybody, the sessions I enjoy so much. If they're helpful for everybody, that just makes me very happy. Great discussion about trade location, looking for best location first, as I understood it. The best location is the cheapest. If there is a low general area, the lowest low seems to be possible before the market falls apart completely is the cheapest trade. I'm going to try this idea. I hope that you find it beneficial, Fred. There's nothing that works every time, and I as much as I would like, I would love to be able to just say, hey, S&P is buy here and sell here today. That's going to be the low, and that's going to be the high. Unfortunately, I can't. Nobody can. Good, Jerry. I'm glad you like it. Mikhail, you're welcome. All right. Well, we've got some time here before the equity open. Looks like some folks are just getting here. If you didn't know, we've started to do the market forecast at 7:45 Central. So, lots of things to talk about, and found myself meandering and yammering past the equity open, and I didn't want to do that anymore. So, yes. Subconscious, something that we're working on doing. It's an administration and a tech issue. We're working on doing that, right? Subconscious is asking if we get access to a practice account while waiting for the funded account. Something we are working on. I don't have a timeline. I don't have a guarantee for when that's going to be available. We have always listened to the feedback and the ideas of our traders, and that's one we've been hearing a lot of, Subconscious. So I'm looking forward to hopefully being able to provide that to our funded traders here very soon. All right? All right. So let's take our deep breath. Always reminding myself to be humble. The market is I'm in the market's environment. grateful. I'm always happy to do what I do every day and see everybody and hopefully help and make a difference for everybody. And creative. The market is going to change throughout the day. I have to keep my fingers on the pulse of what's going on in these markets and be able to accept information that may be contrary to what I think. Trade what I see. Be creative, be flexible, and nimble. Sometimes it takes to be trading. So, all right, looking forward to seeing everybody. We do have the coach's playbook. We're going to be talking about what our cardinal rules are for trading. That's at 11:30 today, and then again at 1, and then we should hopefully see Dan for the recap this afternoon. He wasn't feeling that well yesterday, so yes, the market is always right. Rick, yep, thank you. Yep, and I'm going to be in the pit here in about 5 minutes. I'll see you there. Trade well today, everyone. And looking forward to seeing you at 11:30 for the coach's playbook. Have a great trading day. Get out there, profit, trade well today.